Hey there, savvy investors. Iggy the Investing Iguana here, ready to dive into some exciting financial news. Today, we're going to explore how Centurion Corporation achieved a remarkable 30% revenue increase in Q1 2024. This isn't just a fluke, it's the result of strategic moves and smart management. In this video, we'll decode the key slides from their latest earnings report, breaking down the numbers and strategies that fueled this impressive growth. But before we get into the nitty-gritty, let me pose a question. Have you ever wondered what it takes for a company to maintain such high occupancy rates and achieve significant revenue growth? If you're curious about the secrets behind Centurion's success and want to learn how they are setting new benchmarks in the industry, then stick around. This video is packed with insights that could change the way you think about investing in specialized accommodation. Let's get started. First things first, what is Centurion Corporation? Centurion Corporation Limited, headquartered in Singapore, is a leading provider of specialized accommodation solutions, focusing on purpose-built workers' accommodation, PBWA, and purpose-built student accommodation, PBSA. The company has demonstrated robust growth, reporting a 30% year-on-year revenue increase to 61.1 million Singapore dollars in Q1 2024. This growth is driven by high occupancy rates and positive rental revisions across its global portfolio, which includes significant assets in Singapore, Malaysia, the UK, and Australia. Centurion's strategic initiatives include expanding bed capacity through new developments and asset enhancement projects, such as the redevelopment of a car park into a PBSA block in Melbourne and the development of a large PBWA in Westlight Ubi. The company maintains a strong financial position with a low gearing ratio and ample liquidity, enabling it to pursue an asset-light strategy through joint ventures and private funds. This approach not only supports its growth trajectory but also positions Centurion as a resilient and attractive investment opportunity in the specialized accommodation sector. Slide 1. Let's start with their revenue growth. In Q1 2024, Centurion reported a massive 30% year-on-year increase, hitting 61.1 million Singapore dollars. This impressive jump was driven by the two main business segments, workers' accommodation, PBWA, at 76% and student accommodation, PBSA, at 24%. The company maintained high occupancy rates of 98% for PBWA and 97% for PBSA, indicating strong demand. While direct comparisons to competitors are not provided, these very high occupancy levels suggest Centurion is outperforming industry averages. A report notes that the company's PBSA assets in Europe continue to boast extremely high occupancy rates compared to most other real estate sectors. So in summary, the search results indicate that Centurion is achieving occupancy rates in the high 90% range across its global PBWA and PBSA portfolios, significantly higher than typical for these property sectors, allowing it to capitalize on supply shortages. Geographically, Singapore remains Centurion's largest market at 68% of total revenue. However, they are expanding internationally, with the UK contributing 17% and Malaysia at 8% in Q1 2024. This diversification could provide a buffer against potential headwinds in any single market. The company's financial position looks solid with a low gearing ratio and ample cash reserves. They are actively enhancing existing assets and pursuing an asset-light strategy through joint ventures and private funds to drive future growth. Slide 2. This slide gives us a snapshot of Centurion's prudent capital management and ample liquidity. With total assets of 1.7 billion Singapore dollars, the company has a substantial financial base. Their total borrowings of 0.6 billion Singapore dollars suggest a conservative debt load, while the cash and undrawn committed facilities of 186 million Singapore dollars provide a solid liquidity cushion. The net gearing ratio of 36% indicates a healthy balance between debt and equity, suggesting the company isn't overly leveraged. Additionally, the impressive interest cover ratio of 4.7 times implies Centurion has sufficient earnings to comfortably service its debt obligations. The average debt maturity of 5 years also provides a stable and manageable debt profile, allowing the company to plan and execute its long-term strategies effectively. Overall, this slide paints a picture of a financially disciplined and resilient company. Centurion's strong financial position could make it an attractive investment opportunity for those seeking exposure to the specialized accommodation sector. So, what are the key factors driving Centurion Corporation's revenue growth? Some key factors driving Centurion Corporation's revenue growth appear to be expansion of their purpose-built workers' accommodation (PBWA) and purpose-built student accommodation (PBSA) portfolios through acquisitions and developments in Singapore, Malaysia, Australia, the UK, and the US. The company has been actively growing its accommodation assets across these markets. Strong occupancy rates and positive rental revisions at their existing PBWA and PBSA properties, supported by robust demand for quality accommodation from workers and students in the markets they operate in. Diversification into the student accommodation business segment in 2014, which has provided a new growth driver complementing their established workers' accommodation business. Slide 3. Centurion, a leading provider of accommodation solutions, has been demonstrating a consistent growth trajectory by steadily increasing the number of beds in their portfolio, which is a crucial performance indicator for their business. In the fiscal year 2023, they successfully added 1,086 beds to their portfolio and have projected to further augment it by approximately 2,606 beds in the fiscal year 2024. This growth is fueled by a series of strategic initiatives. One such initiative is the redevelopment of an existing car park into a new purpose-built student accommodation (PBSA) block at Dwell Village, Melbourne City. This redevelopment is expected to contribute an additional 600 beds to their portfolio. Another significant project in their pipeline is the development of a 1,650-bed purpose-built workers' accommodation (PBWA) at Westlight Ubi, which is slated for completion in 2024. In addition to these, Centurion is undertaking an asset enhancement initiative at Westlight Sinai 2, which upon its completion in late 2024 will add around 920 beds. They have also secured a master lease for a 66-bed PBSA in Hong Kong, which is expected to be operational by September 2024. These expansions form an integral part of Centurion's broader strategy to cater to the escalating demand for affordable and well-managed accommodation, particularly in the workers and student housing segments. The consistent increase in bed capacity indicates that Centurion is strategically positioned to seize market opportunities. This could potentially translate into stable returns for shareholders, thereby reinforcing Centurion's commitment to creating shareholder value. Slide 4. Centurion has shown a solid performance in 1Q 2024, with average financial occupancy improving to 96%, up from 94% in 1Q 2023. This uptick is driven by strong demand for quality purpose-built workers' accommodation, PBWA, beds, thanks to the continued enforcement of Act 446. However, revenue from Malaysia PBWA dipped slightly to 4.8 million Singapore dollars from 4.9 million Singapore dollars in 1Q 2023, mainly due to the weaker Malaysian ringgit. But don't let this minor dip fool you. In local currency, revenue actually increased by 5%. The company is not resting on its laurels. They are actively expanding their portfolio with several asset enhancement initiatives, AEIs. For instance, they are adding approximately 920 beds to Westlight Sinai 2, expected to be completed by 4Q 2024. Additionally, they have plans to add around 1,740 beds at Westlight Johor Tech Park and 950 beds at Westlight Pasir Gudang by 2025. They are also evaluating a new PBWA development in Nusajaya, Johor, with an estimated capacity of 7,000 beds. This proactive approach to expansion and enhancement shows Centurion's commitment to growth and adaptability in a competitive market. Slide 5. Centurion has demonstrated a commendable performance in the first quarter of 2024, with the average financial occupancy showing an improvement to 96%, a rise from the 94% recorded in the first quarter of 2023. This increase is primarily driven by the robust demand for quality purpose-built workers' accommodation, PBWA, beds, a trend that can be attributed to the continued enforcement of Act 446. However, it's worth noting that the revenue from Malaysia PBWA experienced a slight dip, falling to 4.8 million Singapore dollars from 4.9 million Singapore dollars in 1Q 2023. This decrease was mainly due to the weaker Malaysian ringgit. But it's important not to be misled by this minor dip. When viewed in local currency terms, the revenue actually increased by 5%, indicating a positive growth trajectory. Centurion is not one to rest on its achievements. The company is actively expanding its portfolio with several asset enhancement initiatives, AEIs. One such initiative is the addition of approximately 920 beds to Westlight Sinai 2, which is expected to be completed by the fourth quarter of 2024. In addition to this, they have plans to add around 1,740 beds at Westlight Johor Tech Park and 950 beds at Westlight Pasir Gudang by 2025. These additions will significantly increase their capacity and allow them to cater to the growing demand for quality accommodation. Furthermore, they are also evaluating a new PBWA development in Nusajaya, Johor, with an estimated capacity of 7,000 beds. This potential development underscores Centurion's commitment to growth and adaptability in a competitive market. It also highlights their proactive approach to expansion and enhancement, which is a key factor in their success in the accommodation sector. Slide 6. This company has shown impressive growth in Q1 2024, with UK revenue hitting 10.4 million Singapore dollars, a 28% increase from the previous year. This growth is driven by a stronger British pound and a continued shortage in purpose-built student accommodation (PBSA) supply, which keeps occupancy rates high at 99%. What's interesting is the positive demand-supply dynamics. The UK remains a top study destination, attracting international students despite tighter visa scrutiny. This has led to a more committed tenant base, benefiting PBSA providers like Centurion. Additionally, the domestic population of higher education age students is growing, further boosting demand. With healthy bookings for the 2024-25 academic year, Centurion is well positioned to capitalize on these trends. Centurion is also exploring ways to enhance its UK portfolio through asset enhancement initiatives and asset-light strategies. Slide 7. The student accommodation sector in Australia is currently experiencing a significant upswing. The financial occupancy rates have seen a substantial increase, jumping from 80% in the first quarter of 2023 to 90% in the same period in 2024. This increase in occupancy has also led to a corresponding growth in revenue by 25%, a result of healthy revisions in rental rates. The primary driver behind this surge is the record number of student arrivals in the country in 2023, coupled with strong pre-bookings for the second semester of the academic year 2024. This trend indicates a robust demand for student housing, which the group is keen to capitalize on. They are exploring new growth opportunities, one of which includes a new block of purpose-built student accommodation, PBSA, in Melbourne. This new facility is expected to add approximately 600 beds to their existing capacity, further strengthening their position in the market. Meanwhile, in the United States, Centurion student housing assets are maintaining a healthy and stable occupancy rate. The Centurion U.S. Student Housing Fund, which has been a significant part of their portfolio, is set to come to term in November 2024. The process of disposing of its assets has already begun, marking the start of a new phase for the company. One of the notable steps in this process has been the successful sale of their assets in Tallahassee, Florida. This move is part of their strategic plan to ensure the continued growth and profitability of the company in the student housing sector. For investors, these developments indicate that Centurion is effectively capitalizing on the growing demand for student accommodation, particularly in Australia. The company's strategic moves, such as expanding its portfolio and maintaining high occupancy rates, suggest a robust growth trajectory. This could potentially translate into attractive returns for investors who are interested in the student accommodation sector. Slide 8. In Singapore, Centurion is making significant strides in expanding its footprint in the student accommodation sector. They are currently developing a new property, Westlight Ubi, which is expected to add 1,650 beds to their capacity by December 2024. In addition to this, they are also undertaking redevelopment projects at Westlight To Guan and Westlight Mandai, with an aim to complete these by 2026. These initiatives underscore their commitment to not only increasing their capacity but also modernizing their facilities to cater to the evolving needs of students. Over in Malaysia, Centurion has strategically entered into sale and leaseback agreements for two of their properties, Westlight Bukit Minyak and Westlight Tampoi, with Malaysia's public sector pension fund KWAP. This move is designed to provide liquidity while still retaining operational control over the properties. In line with their expansion plans, they are also adding 920 beds at Westlight Sinai 2 by the end of 2024. Furthermore, they have plans to add 1,740 beds at Westlight Johor Tech Park and 950 beds at Westlight Pasir Gudang by 2025, thereby significantly increasing their presence in the region. In Australia, they are awaiting final approval to redevelop the Dwell Village Melbourne City car park into a new block. This redevelopment is expected to add 600 beds to their capacity, further strengthening their position in the Australian student accommodation market. Meanwhile, in China, Centurion is making its foray into Hong Kong with a new purpose-built student accommodation, PBSA, of 66 beds through a joint venture. This move marks their entry into a new market, demonstrating their ambition to become a global player in the student accommodation sector. With these strategic initiatives, Centurion is well positioned to capitalize on the growing demand for quality student accommodation across these regions. Slide 9. First up, Centurion is focusing on managing operating performance. They continue to deliver high occupancies with positive rental revisions, indicating strong demand-supply dynamics across their markets. However, they anticipate further increases in operating costs and financing expenses before inflation and high interest rates begin to ease. Their strategy here is to optimize occupancies and rental rates to moderate the cost effects of these dual headwinds. Next, under enhancing portfolio capacity and AMP performance, Centurion plans to redevelop and retrofit their purpose-built dormitories, PBDs, in Singapore. This move is to comply with new regulations and optimized bed capacity, which should enhance their revenue-generating potential. This proactive approach shows their commitment to maintaining and improving their assets. Lastly, in the Seeking Synergistic Growth section, Centurion is strategically reviewing their specialized accommodation portfolio. They are looking for opportunities to recycle and reallocate capital towards synergistic assets and businesses, both in existing and new markets. This diversification approach could unlock additional growth avenues and ensure long-term sustainability. Overall, Centurion's strategy is clear: manage costs, enhance asset performance, and seek growth opportunities. This cautious yet optimistic outlook suggests they are well prepared to navigate the current economic challenges while positioning themselves for future growth. If you're considering investing in Centurion, keep an eye on their ability to execute these strategies effectively. All right, folks, that's a wrap. We've decoded Centurion's key slides and uncovered the secrets behind their 30% revenue surge. If you found this video helpful, smash that like button and subscribe to the Investing Iguana channel for more savvy investment tips. Don't forget to hit the bell icon so you never miss an update. Stay sharp, stay curious, and keep on investing with Iggy the Investing Iguana. See you in the next video.